Good morning from Chicago, everyone. Thanks for coming in. It's 8:01 a.m. Chicago time on Wednesday, the 11th of October, 2023. This is episode number 2555. Thanks for joining me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, bouncing right over into the convergent trading pre-market summary sheet here. We do have the FOMC minutes at 2 o'clock today. That's a big piece. It's going to be very important to listen in on what was discussed during the last FOMC meeting. But this morning, the key news was PPI. PPI came out about a half hour ago. Came in at 0.5% versus the expected 0.3% PPI coming in hot. Core PPI, which is a more important figure now, is 0.3% versus 0.2%, 0.3. So that came in pretty hot. Tomorrow is the big dog. Tomorrow we have U.S. inflation, which is expected at 3.6%. The prior is 3.70. Inflation rate month on month expected at 0.3. Core inflation is the number that the Fed really wants to keep an eye on, and that's expected at 4.1%. The prior is 4.3. If that comes in hot, then the market's not going to like that. Tomorrow we also get GDP out of Great Britain as well. So that's what's on deck. Key news again. U.S. PPI higher than expected, most likely going to stimulate the Fed to be more hawkish. A hawkish Fed is likely to cause the Treasury market to do what it's been doing, which is the Fed's job to push futures down, push Treasuries down in general, which causes yields to be higher, and it kind of shuts off that spigot without the Fed's involvement. And the way the Fed can do that without raising rates, which the market's kind of pricing in another couple of hikes, the way to do that is to scare the market into compliance, right? So that's what we're looking at here. Fed's Bowman says U.S. policy rate may need to rise further, and there you have it. It's just they're going to be hawkish because they need that inflation, they need the PPI to come down, and they can do it either they can either have the market do it, which is the preferred method, or they can do it through the FOMC decision. Samsung Q3 profits dropped less than expected, raising hopes of chip recovery. LVMH, Louis Vuitton, from France, came in pretty poor in terms of results. So the luxury retail kind of sector is taking a bit of a hit this morning in Europe. Novo Nordisk ends Ozempic kidney trial early after signs of success, and Exxon agrees to buy Pioneer Natural Resources for $59.5 billion. It was rumored that it's a $60 billion deal. Today, what's left here is Fed's Waller at 10:15, Fed's Bostic at 12:15, the FOMC minutes, which are a top-tier release at 2 o'clock, and then 4:30 we get crude oil. And then we're looking now at the S&P. The S&P is in a multi-distribution profile right now. Just pretty relatively active price discovery starting from yesterday's middle. And we have pretty good volume. 231,000 volumes just held steady above 200,000 a session. And overall, it's been heavier than expected at 170 to 190,000. Range is not incredibly impressive, just 22 points so far. Pretty run-of-the-mill range so far. Point of control 43.93. Point of control shifting up from 4,300 so dramatically over the last couple of sessions. The high is 44.10. Yesterday's high, by the way, was 44.19 in the S&P, 44.19, and the high after the gap down in September was 44.18.5. So yesterday was a 2-tick test and fail of the gap zone. Okay, so it was expected that it would finish in the middle, and it did. And we're done with this sheet. Let's take a look at the actual market action. Let's remove that transition. Not liking that transition at all. No transition. Okay, so let's take a look at what the market has done. Yesterday, day before yesterday, surprisingly, after the news of war and so on, the market dropped, but it completely ripped through the rally top in the point of control Friday and ended up putting in single prints in that area, completely rejecting it and finishing even higher. Okay, this clearly caught a bunch of people by surprise. There was pretty aggressive price discovery in that mechanism there. And then yesterday we opened just a tick outside of the range, opened at 75, opened at 76, the prior high at 75.75. So technically an open auction out of range. And what it did is it pulled back into the range and it just wasn't able to hold on to those prices. Difficult to read, in my opinion. It didn't get down as far enough as the point of control or to touch settlement. It just didn't. It got really close. And then it just immediately pushed higher, and it just price discovery was higher for most of the session. It ended up pushing the high of the gap at 1850 by 2 ticks. It went to 19 and then came back to the middle, and it got trapped in the middle. And so what we have yesterday is a profile that is multi-distribution, as you can see here, multi-distribution with the market kind of finishing in the middle. So what the S&P was telling us yesterday is it was accepting the middle prices. It was rejecting the gap. The expectation yesterday, even much earlier than the actual close, the expectation was it's likely to get trapped right in the middle here and finish somewhere in the middle against the 4,400 century figure. And that's where we ended up. So we ended up having to struggle above the 4,400 on this first try. And then this morning, or right now, we are trying to squeeze through and push through the low volume node from yesterday. Come on now. There we are. We're trying to squeeze through the low volume node. This is the low volume node from yesterday. This right here. And the overnight session is just kind of pushing through it. Let's refresh the profile here. And it's trying to push through it. For most of the session, the opening of the overnight session was an open auction. It went sideways. The Asian session was absolutely dead. There was just nothing going on. This is a point and figure chart. 1 tick by 8, 1 tick by 8. And you could see there was just no action until Europe opened, which happened right here. So these few bars of 1 tick by 8 point and figure bars represent the entire Asian session, which starts at 7 p.m. Central, 8 Eastern, and goes through to 1 a.m. Central, 2 Eastern, okay? And nothing happened during that session, and then the Europeans come in, test down new low, test up, break, and push right through the open, and then we start to kind of squeeze higher. We sold off a little bit on the PPI right in here, right there. So we were up here. I didn't catch the SOC. John, what is the SOC for PPI? I didn't catch it. I didn't check it. But we fell off on PPI coming in hotter. That's not good news. And then from there, we've basically just traded upwards. And it's just right now the profile multi-distribution, messy looking, boxy looking profile. Looks like Winston Churchill there. Multi-distribution profile, and it's just pretty noisy. Note that we are trading in this zone right here. Okay, so there's kind of a clear area right here and right up here. This box right now is, thank you, John, 4404.50, 4404.50. So we've taken back the SOC already from the PPI release. SOC, for those of you who are new, are means the scene of the crime, or the point at which the number came in and interrupted the auction. We've come back to it, cleaned that up already, but we are in this zone. And this box zone, normally we have an LIS. This box zone is kind of an LIS this morning. This morning is one of those situations where we're in between two different distributions. The uppermost distribution into the gap, and then a big distribution in the middle that's been formed right around the 4,400. Yesterday's point of control is at 4,400. So we have this big magnet at 4,400. It's a major strike price as we come into Friday's options. It's not the monthly option, it's Friday, just weekly. And you know, we're just in this kind of tough area, stuck between the potential for going and filling in the gap. Let's look at the composite. There's your gap back there, right where that square is. Why isn't the square going away? Oh, it's the wrong screen. Right where the square is, let's clear that out. Boop. So we have this gap, and this is 1850, 50. This is 19 even. And you could see this kind of big wick that we left behind from yesterday's action. We finished right around the middle of the range yesterday to settle at 91.50, and we've moved away. So we're processing, we're in the middle of trading that sell-off portion of the wick there yesterday. It's really trying to regain the gap. So the question for me today is, very unlikely that we would break one-time framing up to the downside. So the question is, how long and how much effort is it going to take to get to the point where we're pushing above the overnight high of 44.10 to take out yesterday's high at 19, and then to start filling the gap zone in from 18.50, which is now 19, all the way to 44.46. Once we're in the gap, generally, once we're in the gap, we are very likely to fill the gap. The gap is a vacuum in the auction. Some of you have heard this yesterday. It's part of our lessons. A gap is a vacuum in the auction, and the market is likely to keep testing up and up and up to really see if there's any interest from either side, because a gap doesn't describe which side is in control. It's just an area that was completely skipped in the overnight session. So to me, unless we fill in this gap or we break the low to end the one-time framing up on these profiles, it's probably going to be chop city. That's the conclusion today. It's very likely to just sit here and chop around. Let's compress this to look at the entire region here. So unless let me choose a different color. Unless we squeeze the overnight high and push through the sell-off point yesterday, or sell off on the open to go all the way down, which is a far, far distance from where we are now, to take out the 71 quarter, it is likely to just fill in the middle. It's just likely to just sit on top of this 400 century figure and just up and down, up and down. Most likely an open auction in range open. Most likely a market that is not likely to respect our day generated prices on the inside. So most likely we're looking for failures on the outside, trading from the outside in today, most likely. So that's what that looks like. Let's hop on over to other products. Looking at the NQ, the NQ has already filled its gap. It's already reached its primary destination, which we talked about a few days ago up here in this high volume node. The first high volume node was at 15,300. It got there yesterday. The second high volume node is 15,370, 360, which we got there yesterday as well. So the NASDAQ kind of already done the job. The S&P is basically trading somewhere down here relative to the NASDAQ. NASDAQ's way ahead. And so the NQ has already reached its destination. It's likely to just keep pushing to the LVN 15,500 up here. So the NASDAQ's range is 15,100 to 15,500. Test and retest until the ES gets into the game here. Crude just, I didn't talk about this yesterday, I don't think, but I did talk about this to a certain group of people. I talked about the fact that once we've gapped up, and if we did not reject and continue, so we didn't have a gap and go situation, chances are the market is likely to be responsive to the gap. So we're looking for a retest of that 84.59 and then the 83.28. So the crude is really just not expecting much more than for it to just kind of work itself back to the high volume node in this region, down in this point of control of 82.50, 82.60, something like that, 82.60. The big picture balance in crude is still $80. $80 a barrel. I think the Saudis will be happy with $80, and I think those who are pumping gas into their Hummer will be happy with $80 as well. It's better than 94. But to me, this looks like it's likely to just keep walking down. And there are going to be efforts by the Russians, by Venezuela, by Saudi Arabia to prop up crude and keep prices going higher. The most important of whom, the most affected party is going to be Russia. So you're likely to hear a lot of rhetoric from Putin and the energy minister and so on about crude, and we'll probably see reactions in that. But overall, crude has had an open auction today. It's been responsive. It opened in a gap, has responded to value low right here, and is coming off. And if it takes out the low, it's very likely to then do the same thing it did in the last couple of days, which is to test lower and test lower and test lower. Not seeing anything different there for crude. Okay, good luck. It's 8:20, 10 minutes to the open. Get your head in the game. Make sure you have your price map for the day, and you understand your risk parameters and so on, and just get your mind in the game. Forget about what everybody else thinks, including me. Trade your own plan. Good luck.